Hello, everyone. We have a lot of people on this call here, so I'm just going to give it to about 1 minute after the hour, and we're going to have some fun here. So thank you for those who are on early. I greatly appreciate that. Give it about 1 more minute, and we'll go after 10, and we'll get started here, okay? Can you hear me now, Carl? I'm not speaking yet, everyone. I'm not talking. So I haven't started speaking yet. All right. Good morning or good afternoon, depending on where you are in the country. My name is Josh Elohim. I'll be your speaker for today. Long time. It's been a while, so hopefully everyone's safe out there. Everyone's having fun amongst all this craziness, right? Well, I'm really glad to be doing this again, discussing the easiest way to sell IUL. So just some quick housekeeping for the purposes of the call. Everyone's going to be muted so we can get to this smoothly. If you do have any questions, then go ahead and put them into the chat. And then we can go through those questions. There's a question there. So we'll go through everything after the call with a Q&A session. My audio is on. Can anyone else respond to see if they can hear me? Because I know that my audio is 100% on and working. So if you could respond just to make sure you hear me. I think 1 or 2 people are saying they can't hear me. So, okay, that's what I figured. Thank you very much. So you might want to check with your audio there, Carl, because everything is working here. So we're good to go here. Thank you guys for responding so quickly. So again, this webinar is regarding the easiest ways to sell IUL. There is, if for some reason you're not on board with Back9 Insurance, there is a place in the chat box where you can go ahead and just click on there and set up your complimentary account today. If for some reason you're not using Quote and Apply or Back9 Insurance currently right now. So let's go and have some fun here. So again, IUL can be a very complex thing, right? If you make it, it can be extremely difficult. And with this software that we have access to now, it's become extremely easy. What I've learned from doing sales from 20 years now is a lot of your clients and you as an agent learn visually. So I've seen in the past where agents try to explain stuff over the phone or even face-to-face with no visuals, and it becomes really challenging for people. I'd say 90% of people are visual learners. So they have to see it to really be able to get it. So I'm going to jump right into Quote and Apply here. Hopefully everyone on the call knows what this software is. We don't have to go through that part, but this is our life insurance software. It allows the agent or the client the ability to run life insurance quotes in seconds and apply in minutes. So I'm going to kind of just jump ahead here. Hopefully you've all seen this already. Last name, first name, ask those difficult questions. Put your client's health in. We know people, just smoker, non-smoker in the past. Now we know people are smoking different things. So just answer your smoker question. Height, weight. If you don't know it, a lot of people miss this, but you can actually skip this. I know it's a personal question so quickly, but I just got off the phone with an agent who said, this height, weight helped me out tremendously because the client thought they were a preferred best. We put in their height, weight, they end up being a standard. So it can help there, but it is a personal question. You can skip it. You put your client's date of birth in, and minus us talking, you see how fast you get rates. So hopefully a lot of you are familiar with term insurance. The whole purpose of today is to talk about IUL. So let's go ahead and go to this lifetime coverage, and then we'll go into this here. So when I click on lifetime coverage, there's a plethora of options here for permanent insurance. Today, I really just want to focus on cash accumulation. So let's say your client's like, hey, I just want to, we want to use life insurance to make a little money here. So that's what we're going to focus on today. So what I'm going to do is I'm actually going to click on accumulation IUL. If you said, Josh, which is the one that will make the most money, that's going to be it. Now let's take one step back here. Let's discuss what is IUL. It stands for Index Universal Life Insurance. So the analogy I like to use, so it's based on the S&P 500. Whatever the S&P 500 does for that year, that's what gets credited to your account. Now, this way this works is that you have caps on these products, and you also have a zero floor. So ideally, these are really secure because the client's going to participate in the upside of the equation, but not the downside. Does that make sense, everybody? So in the past, we had variable life insurance. Variable was great. Market does 20%. We get 20% credit to our account. We're very happy. Everyone's excited. The challenge with VUL is next year, the market does minus 20%. Now your client has a negative loss. It's extremely hard to regain from negative with these policies, which is why the carriers finally got smart and they created something called IUL. Again, Index Universal Life. Let's use the same exact scenario. Market does 20%. Well, these products have caps of anywhere, call it from 8 to 12, give or take. So you wouldn't get that 20% in this situation, you would get that 8 to 12 cap. But here's the blessing. When the market does minus 20 the next year, now you have that zero floor. So again, your client's going to participate in the upside of the equation, but not the downside. Just kind of a brief visual of how IUL works to keep it really simple. So I just went ahead and I clicked accumulation IUL here. Now I'm going to scroll down here. It's going to show $1 million. What we're running here is called a max non-MEC premium. What that means is the most money we can put in based on $1 million death benefit for whatever age and health class you put in there. So in this situation, I can put in almost $5 grand a month. This is around a 43-year-old, just to giving you a heads up, okay? So this is one way to do it if you want to max this out. I'm a fan of this one. I like this one. There's one I'm going to show you next, which I'm a really big fan of. So what I want to do here is, what I'm a big fan of is what's called minimum non-MEC, meaning that I like to do this in two separate sales. The first part is if someone needs life insurance, term insurance provides a great need if they need a high death benefit for a low cost. That's what term insurance is great for. So in this situation, if I need a high death benefit, I can use term insurance. I don't like even calling it term. We like to call it protection, right? So if your client's not here tomorrow, that's what term insurance is great for, a high death benefit for a low cost. Let's assume that this client needed $1 million of term insurance. Well, this is what we're offering here at Permanent. I would just say, hey, go ahead and let's do $1 million of term. Okay, you're covered there. The next question I would ask them is, are you putting money away for savings? Now, if the answer is no, it becomes a kind of a shorter conversation, but you can also plant seeds. So if they say, hey, I am putting money away, my next question would be, I'm going to click on this show policy details. Everyone stay with me here. And does everyone see where it says tax-free income? This is right here at your fingertips. So you don't have to even, I did put this in the handout section, by the way, if you want this, but I could just click here. When I click on this, it's going to bring up this bucket sheet. This tells the greatest story ever. You may or may not have already heard this story, but again, we all learn visually. So that's why we're having success here with selling this, because we can give people visuals. Now, by a raise of hands, which I can't see, we all know people hate life insurance, right? I sell life insurance and I hate it myself. Well, what do I hate more than life insurance though? Because everyone see that right there? Paying taxes, right? So it gets a good laugh when you say that to the client, by the way, because we're life insurance agents. So now what this piece shows me is how am I being taxed? Look at top income earners and how am I being taxed for the top tax rates? I can't speak about other states, but in California here, we're close to 50% when you add these all up here, right? So I call this the bucket sheet because, again, this is where your client's money is right now. So we have our first bucket, which is like our deferred bucket, 401ks. A lot of your clients probably have money in the deferred bucket. I think it's a great bucket. If someone's willing to match you a percentage, I would put that percent of my money into that bucket there. So let's say someone's willing to match me 7%, I put 7% of my money. Great vehicle for growth. Then you have your taxable bucket, your stocks, your bonds, your mutual funds. Where else can you put in $100,000 and potentially earn $1 million, right? There's really nowhere. So again, a great bucket. Then you have like your tax advantage bucket, which is like your Roth IRAs. Another great vehicle. The problem with that bucket is that people who make too much money, they don't qualify. What you're going to notice here is everything I talk about, I show. And that's why I also help agents get on the call with their clients, and I have like a 95% close ratio. I don't sell anything, we just spread the good news. This would be your marketing manager, not me doing this, unless you work with me. So if I scroll down here, so those are 3 buckets, right? I love these buckets. I never say to put all your money into life insurance. To me, that'd be absolutely foolish. Because again, there's other great vehicles out there. But the thing is that, does everyone see these little spigots right here? These buckets are great for growth, but what most people forget about is distributions. Like when I want to take this money out of these buckets, how does that work? So here's a visual for you that shows me how am I being taxed on these 3 buckets, pre-59.5 up to 70.5. Because it's not how much money you make, it's how much you get to keep, correct? Well, people forget that a lot of the time, and you as the agent have to remind them about that. And that's what this bucket sheet does very well, is just reminds them of where their money is and where it's at. Now, I always joke around with the agent. I say, hey, if I didn't, or the client, if I didn't have your attention, I have it now, because I'm talking about your money, correct? So there's a visual. That's how this works on it. Here's kind of your sale. Now that you've seen where your money is how it's being taxed, now I can scroll down and say, hey, what if there's a way if I could show you how to create non-reportable tax-free income? Is that something you'd be interested in? No one said no to that to me in 11 years. So I'm assuming you're saying absolutely, right? Well, there's one more bucket you may not be familiar with, and that bucket's called life insurance. Now, a lot of people say, hey, I thought life insurance was just for a death benefit. No, that's called term insurance, right? Now so again, it's all about visuals. How can I physically show you what's going on instead of just talking to you about it? So then what I like to do is I'm going to use this visual more, but so this shows me how am I being taxed on this bucket again, pre-59.5 up to 70.5. And as you may or may not know, the real beauty of life insurance is that it grows tax deferred and you can take the money out tax free, which I'll talk about in a second here. Because of this thing right here, this is the reason why no one reads anything anymore. We're stimulated by videos, we're stimulated by seeing stuff. That's the reason, because of the phone. It's changing the way we've done this in the past. Before it was 3 hours, sit down, have a conversation, get to know the person. Now I need instant gratification right away. Now, because of this pandemic, guess what? People are panicking and buying life insurance as we speak. I'm the agent, you're the client. So this is happening right now on the spot here. So there's my visual. Just again to recap, how did I get there, Josh? So I pushed accumulation, I hit show policy details, and I just clicked here, tax-free income. Does everyone see that there? That's how I got to there. So you don't have to download this, you can just have it. If you want to market it though, it is in the handouts, okay? All right, so let me show you how I prefer to do this, because it takes away a lot of the stereotypes about IUL. So what I mean by stereotypes is it's over cost, it's not sold properly. Well, let me show you how I would do this. By the way, if you look here for the more advanced people on the call, we have a ton of options of how to do this. And cash value at age, you can do a no solve. But to keep it very simple, which is my gift, is I'm gonna go to what's called a minimum non-MEC. Did everyone just see what I just did right there? Now, hopefully you all remember what a MEC is. That's that modified endowment contract. So we don't want to MEC the policy, because what it does, it defeats the whole purpose of getting tax-free income. So we're going to do the minimum non-MEC, the lowest death benefit possible. There's 2 things that happen when I do this that are very important for your client. The first thing is when I lower my death benefit, it lowers my cost of insurance charges. That's how the carrier gets paid, and it makes sense, right? If you were to buy this policy today and you weren't here tomorrow, guess what? That carrier is on the hook for, in this situation, $1 million death benefit. Well, there's cost involved in that, so that makes sense, right? So we're going to do the lowest death benefit possible. The second thing is it also lowers the agent's commission. Sorry, you guys and gals. So I say that right to the client. So what I say is, hey, if the money's not going to the carrier, the money's not going to the agent, well, where is it going to? It's just going to go into your policy so we can grow faster. Does that make sense, everybody? That's really important to understand what we're doing when we're doing the minimum non-MAC. If you have questions, put them in the chat box. I already see questions coming through here. So the next thing I say is, well, how much are you comfortable putting into this on a monthly basis? Now, before I have them answer that question, I say, hey, before you answer that, we're not going to ask you to pay this forever. Look, I can do different payment methods here. Here we go. I can do pay for 20 years, pay to age 65. My favorite is a 10 pay because I think people can see 10 years down the road. So once they plug in those numbers, we're going to show a max distribution from 65 to 90. Does everyone see that? If the person's older, I might just say no here, not show any distributions, but it's up to you. And I'm just going to hit this rerun button. Never in the history of our business have you, the agent, been able to pivot so quickly right in front of your client. Did everyone just see what I just did right there? I can't even use my jokes anymore. It takes the software is too fast now. So I have a few options here. Does everyone look what happened to my death benefit? You said I went from $1 million down to 200,000. So I can pick different companies here. I've got some basic information about what's going on here. I can hit show policy details to see, is an exam required? John Hancock has vitality. They have an e-delivery. So I got some basic stuff here, but now watch. So most of the clients can make a decision just from this information, but look at this. I can also click on the PDF. Does everyone see that right there? We can actually get right into the illustration right here. I did a campaign when this pandemic first started, and it was sell life insurance from home. We got like 400 agents on that. But do you all see how you can actually do this right from your home? Again, I'm the agent, you're the client. We're doing this thing right now. So look, I can click on here and we're dancing here. I can zoom into the illustration. It's one thing to tell people what's going on, but when you tell them and you show them at the same time, that's when sales happen. So I'm going to dive down to what we call the meat and potatoes here. Is everyone with me? Can everyone see where I am? I can zoom right into this illustration here. So again, this is the easiest way, hands down, to do this. By the way, we've had this software for about 5 years now, so I know how to live without this software. So I've been doing this for 11 years now. So for 6 years, I didn't have any access to this. So I'm very thankful for this. Now, if you all look here, we have a male 44, preferred non-smoker, just giving you some of the basics. You don't have to go over the whole illustration. No one's going to listen to that. So let me give you the basics of what I recommend showing people. We're putting in $1,000 a month, and we're doing that for, so $12,000 a year. Let me zoom in a little closer. Hopefully you can all see that. And we're just asking them to pay for 10 years. So we're putting in $120,000 over 10 years. Let's keep this very simple, very high level. People want to know what the fees are. What are the cost of insurance charges? A very easy way to do that is look at my policy value is what's currently growing in the policy right now. So a very high level is to say, hey, I take my 12,000, I subtract it from my 9,900. Those are my cost of insurance charges year one. There you go. That's how it works. Now, my surrender charge, surrender value is if I say, hey, I want to walk away from this policy and take all the money out. There are higher charges for surrender fees in the earlier years, but if I was to scroll down here, if everyone looks about year 13, does everyone see that number is the same? So that just means that my surrender charges are gone at that point. Now, there's always going to be cost of insurance charges because if you're not here tomorrow, the carrier's on the hook for that. So that's a very simple, high-level way to explain my cost of insurance charges and my surrender charges. So there you go. So what else comes up in here? So this is what we call a flexible premium contract. You see everyone's here, right? It's right here. Again, everything I talk about, I show. So what that means is we're showing a 10 pay here. So let's just say things are going great with your client's business and they could just pay year 11. It's a flexible contract. They could pay year 12. It's really up to them. Now, let's say that at the same time, let's say that in year 7, they have a very rough year. It happens, right? Because there's cash in your policy, you are able to use that cash value to pay for the premium. Now, obviously, it does affect your numbers, but people want to know about that flexibility. So this is a flexible contract. That's probably one of the biggest differences with whole life is that it's not as flexible. Well, here it is. Now, again, I always encourage people to pay whatever you pick, do your best to make the payment. So here, we're picking a 10 pay, try to do your best to not skip any payments. But again, things happen. Another thing that comes up is that you have access to this money after the first year, if and whenever you want, for whatever reason you want. So you could pull from this policy. So now, and what I do is I usually jump back and forth here. Let's go back to our visual. So if you need 20 grand, Mr. Client, now that you've seen how this works and how I'm being taxed, which bucket do you want to pull from? Go ahead, I'll wait. The answer is you don't want to pull from any of these buckets, right? So because you know how you're being taxed, especially before 59.5. So you want to pull from this bucket right here. So again, people are visual, that's how they learn. So I kind of jump back and forth to remind them, because they'll forget as you're talking to them, why are we doing this? All right, well, let's just jump back and forth here to give you that reminder, right? Visually. Okay, so again, you have access to this money if and whenever you want. So what I tell people is try to do your best to not touch the money during whatever funding period you pick. So if you were to pick a 10 pay, I'd say, hey, try your best to not touch the money till after the 10 years. Obviously, the longer you wait, the longer your money is going to grow. This is not like a secret here. This is called compounding interest. I'm sure you probably all remember that from your accounting class in college, right? The professor said if you put away $1 a day from age 18 to 65, you'll be a millionaire. I didn't listen. I don't know if anyone else did, but so it's really just compounding interest here. It's really straightforward. And with that cap and that floor, that's what gives you the stability that you need to feel comfortable. So some other things that come up here is this whole tax-free, like it's a gray area. Like, is it really tax-free? Come on. Well, again, I'm a simple person. Here's how I explain it. Whatever you put into your contract is called your basis. So in this situation, we're putting in 120 grand, right? Now remember, life insurance is paid for with after-tax dollars. So I've already paid taxes on the front end of this, giving me the ability to take it out tax-free. That's really important to understand. So we're not skipping taxes here. We're just basically paying them up front and then giving the ability. So that's one thing to understand. Here's an easy analogy to give you a visual that people can understand. Someone said this here in the office. So would you rather pay taxes on the seed that you're planting, or would you rather pay taxes on the harvest? That's what we're doing here is I'm telling you, let's pay taxes on the seed for when the harvest comes, we're going to take that money out tax-free. Feel free to use that line if you want. When I heard it, it made a lot of sense to me, and hopefully something you can use as well. All right, so again, let's go back to this. So again, I put in $120,000, that's called my basis, right? The way, and no one teaches this, but the way that you should physically do this is I'm gonna take out up to my basis, I'm gonna take that via withdrawal. It's just like calling my bank and saying, hey, I wanna take money out. They don't ask any questions, right? The next dollar that comes out of that loan, now I'm gonna switch, the next dollar that comes out of the account, now I'm gonna switch over to a loan. And you may have heard the terminology, become your own bank, because what happens is that this carrier is gonna charge me 1 or 2 or 3% to borrow the money, but then what they do is they credit me back that same 1 or 2 or 3%. So it's what we call a wash loan. Now here's the key factor, listen very closely. As long as you never surrender this policy and you die with it, what is the death benefit to the beneficiaries? I'll wait, go ahead. The answer is tax-free. So as long as you never surrender this policy, you keep it forever, you're never going to have to pay taxes on the gains in the contract. Does that make sense, everybody? That's how this works here, to keep it very simple, very high level. It's funny to hear different people are trying to spin this in so many different ways. Like the newest one is that, bank on yourself. You hear different things now, but it all goes back to the same thing, right? Also, the way you know we ran this correctly is because everyone normally when you run this at $1 million, have a look here. We have cash value right away here and the surrender value. Normally this is 3, 4, 5 years if you have $1 million death benefit. Does everyone see that there? That's how you know they ran this correct, because you have cash value, surrender value right away. So just so you all know, there's something on this policy that's built in that I really like to protect the client from themselves. Let's say you sell this to a 1-year-old, by the way, which is the absolute best person you can offer this to. And why? Because of time. So let's just say you sold this to a 1-year-old and maybe you're not here when they pull this policy out. The carriers got smart and they built something called an overloan protection rider. So what this does is it protects the client from themselves. At any given time, if this policy is going to die, it will automatically shut off and turn into a paid up policy. So that's where it helps you to avoid that phantom income. Just wanted to give you a heads up. So I show that to the client as well right here on the spot. So that's really important to understand. So let me go back here. There's one more thing I want to show that a lot of agents are afraid to talk about. And it's this zero column here. Does everyone see this zero column? You know, with life insurance, you have non-guaranteed and you have guaranteed when it comes to universal life. I sleep very well at night because I'm just very transparent and I talk about everything. So here's how I explain this. In any cash value situation where you have growth in any type of policy, you have to show the worst case scenario. So I kind of call this Armageddon because these two things need to happen, which have never occurred in the history of our business. But here we go. The first thing is that this carrier, in this situation, John Hancock, has to charge their maximum cost of insurance charges every single year. Never happened in the history of their business. They've been around hundreds of years. The second thing is that the S&P 500 has to get zero credited to it every single year. If those two things were to occur, if I scroll down here, at the client's age 66, they would have to put more money into the contract. Does everyone see that? So in essence, look, I like to show it. I never want anyone coming back to me saying, you never told me about this. Well, again, this is the absolute worst case scenario. Now, you and I know that if the S&P 500 does zero for 20 years, we're all in some pretty serious trouble. We're fighting for food and survival at that point. So again, the column is here. Let's talk about it. So what do we think is really going to happen is this column right here. Now, by the way, does everyone see we're running this at a 5.59% interest rate? In my opinion, that's being pretty conservative because the S&P 500 over the last 30 years has averaged around 10%. Now, when you factor in a cap and a floor like these products have, you're looking at more like 6, 7, or 8%. But I would much rather under-promise and over-deliver, if that makes sense here. So let's go through this here. So I put in $120,000 in this situation, right? Now I have two options at my age 65. I have access to about $203,000 of tax-free income, not bad for paying $120. Or the smartest way to do it is use this to supplement my retirement, where I'm going to take out about, call it $16,000 a year from 65 all the way to 90. And at that point, I've pulled out $300,000 of tax-free income. So the question I always ask is how much you have to make before taxes to get $300K after taxes? And you all kind of know the answer to that, right? So again, we're talking about after-tax dollars here. Now, again, if they're happy with these numbers, you and I know that if this does 6.59% on average, it's going to change the numbers tremendously. But again, it's all about under-promising and over-delivering. And I'm a big fan of that. So that's some of the key points that I point out for IUL. It's not a ton of stuff. I mean, this is a long illustration. We can get really, but you know, there's a phrase in our business that analysis creates paralysis. So the more, if you talk too much, you lose people because again, our attention spans have changed tremendously. So that's how really simple it is to show kind of what's going on here and how this works here. I talk about this page, and then I talk about the tax-free income. What am I looking at here? Most of the time when your client sees this though, they're very happy with these returns, trust me. And again, you're not saying, hey, you know, we're not trying to compete here with the stock market. Does everyone see that? I encourage people. I'm a big fan of two things here. I call this diversification. So in essence, I'm saying let's diversify our portfolio because what are we really doing here is we're saying, hey, if we're creating a fourth bucket that most people don't have access to right now. And that fourth bucket is a tax-free, a non-reportable tax-free bucket. So that's what we're trying to accomplish here. And again, we're not trying to replace what people are doing. We're just trying to help them out here, okay? Does that make sense? Does everyone see? I kind of repeat a few things here, but this is what a lot of the clients need to hear so they understand that. I also call this a forced savings account. You know, so if you want to write that down, unfortunately, as a country, a lot of us are guilty of this, but we're not saving money, right? You know, guilty as charged here. So what does that mean? we're going to be working for the rest of our lives here. So we're trying to give people in their 30s and 40s, forcing them to save some money. That's all this really is here, is a forced savings account. So hopefully that's something you can use on your side to help people out. So once I kind of finish that, one of the questions that I ask people, and this is are taxes going to be going down or taxes going to be going up? A lot of people say taxes are going to be going up. Okay, well, if that's the case, this whole story of defer my 401k and I'm going to be in a lower tax bracket is probably not going to happen, right? So if we think taxes are going up, I have 3 great reasons to tell people why taxes are going up. This is in a book, so I didn't make this up. Tax-Free Income, Patrick Kelly. I think it's a great read. The 3 things he talks about is, the first thing is our deficit. What are we at, like 30 trillion right now? We're printing money like it's not even real. It's unbelievable. The second thing is our Social Security. It's like, is that going to be there when we potentially need it? The third thing is our healthcare system. That's 3 reasons why I personally feel like taxes are going to be going up. And if you want, you can share those with your clients as you're having this conversation. So again, this is a bucket sheet. It tells a great story. There's great visuals. I love all the questions you guys are asking. Please keep on asking those questions. I'm going to get to the good ones, I promise you, okay? All right, so let's just go back here. So let's say your client's liking this. This is great. I want to do this, but you know what? 1,000 is a little bit rich for me. What about 500? So what do? You say, hey, it's going to be around half, right? And they say, I still want to see the illustration. You're like, why me, God? Well, look at now with this software, I just scroll to the bottom of the page, right? You want to see 500? I just put in here, look at, I just put in 500. I go to the bottom, I hit the rerun button. In the past, these used to take 5 or 6 meetings to close this stuff. At that point, you lose the agent, you lose the client, and the agent gets frustrated as well. Does everyone see how fast I just pivoted right there? There's 500. So that's really how simple this is. So now we're seeing this happen in 1 meeting instead of 5, just because of the software. So if I want, hey, I don't like John Hancock for some reason, whatever it is, I can change companies here. Nationwide's a great company. We have great companies on here. So what's your client? The client naturally normally says, hey, what's next? Now we all know what that means, right? They want to buy something. So I always joke around and I use a takeaway. I say, hey, I'm glad that you like in this situation Nationwide, but guess what? They want to date you as well, meaning an application and an exam. So normally in the past, you pull out, this is like a 50 or a 60-page paper application. So in the past, you pull this bad boy out, your client has a heart attack and dies on the spot, there goes your case. Well, now, does everyone see this little continue button right here? Look, no more paper. We're finally not killing the rainforest in Costa Rica, right? So I put in an email and phone number. When I hit this next button, there's 2 very important things that are going to happen for you. The first thing is whatever email you put in, that client's going to receive an email. So technically, you could walk away if you weren't using Zoom, let them finish the application themselves. Now, if you aren't using Zoom, why not just keep going, right? So we're doing the application here. Also, let's say that you take your link and you market it a few ways on social media, LinkedIn, Facebook. If someone clicks on your link, you want to know about it, correct? You also get an email at this point as well. So let's keep going here and fly through this. I put the first part of my address, just 310. Does everyone see all the information just auto-populated? We pull from the computer's IP address, which is scary and cool at the same time. Let's keep going here. Is this person employed? If no, just tell us the reason why, no big deal. If yes, let's put in, we'll just say back 9 for back 9 insurance, we'll do sales. I put in my company address. Again, I find it auto-populates. We're moving right along here. Will this person own the policy? We do a ton of key man, buy, sell. But the biggest misconception with a lot of you on this call probably are PNC agents or financial planners. You work with business owners. So unfortunately, we do a lot of key man and buy, sell, but it's normally funded by term insurance because the agent's not comfortable having this conversation. Well, what I tell the business owner is I'm going to give them what they want with the, to protect this key man, buy, sell with term, but I'm going to say, hey, do you know that you can also start creating non-reportable tax-free income, and you can also pay those premiums out of your business? This is what I see. Boom. Oh, shoot. I can do that? We're writing a ton of key man and buy sell, but we're seeing 50% of these cases now be funded by IUL or a blend of term and IUL. So your case goes from 2,000 or 3,000 target to $15,000, $20,000. And that's how you do it. So will this person own a policy? Let's just say yes for now to make it easy. Who's going to be the beneficiary? A trust, a business, individual? Just to make it easy, I'll say individual. We'll say Mrs. Doe. We'll say that's the wife. We'll go next. You can add a contingent beneficiary to back up the primary here. We'll just skip that step. So look at this: income, assets, liabilities. Put in the social, put in the state, put in the driver's license. You can all see I've done this a few times, right? Will this person own the, do they have an existing life insurance? If yes, just tell us the situation. Just so you know, we are set up for 1035s and also replacements right here. Let's just say no for now so we can keep going here. Skip that step. If you haven't seen this, you're gonna love this. You all have the ability to basically, you all know these treacherous APSs, right? The attending physician statements. What a nightmare. We partner with a company on the spot. I can basically pick the facility I'm a part of. I just launch this on the spot, pick my medical facility. If it's not there, type it in up here. Let's just say UCLA. They take like months to get records back. I ask the client, or I pass them the screen, put in your username or your password. Once I hit this connect button, we are able to pull those medical records instantaneously right on the spot. Absolute game changer in our business. If the client doesn't know their password, they can reset it right here or create an account. You could just say no, because guess what? I can send a text message or an email right to the client, let them do this on their own free time. Or I could just say no and skip right by it. We're at the medical questions here. We're almost done here. If I didn't put that height weight in, I have to put something in now. So I'll just answer a few medical questions. I can also, with some carriers, I can bind coverage here or just make a payment. It'll tell you which one or the other. Let's just skip that for now. All right, how many people by a raise of hands, which I can't see again, have had issues with examiners? What a nightmare, from the agent to the client to the GA to the exam company. That's 4 ways things can go wrong, right? So if you look here, based on whatever zip code you put in across the country, how about a live calendar from exam 1 of real times to book your exam? So I pick my day, I pick my time. We just booked the exam. It was that simple. Client gets a calendar invite right to their calendar so they don't forget about it, as well as the agent, the examiner calls the client the day before. Ever since we've been implemented this new structure, our exam completion ratio has gone to the roof, and you can see why here. Last 2 steps. Maybe I haven't signed this application yet. I could sign via email, or I could just hit sign now. So, or your client basically does this 100% by themselves. Believe it or not, they can. And we also are starting to see your clients actually submit more, to do more videos like this by themselves. Or you can meet them face to face, just like that. All the information auto-populates the DocuSign, and you have a fully completed 50, 60-page paper application. My finger's getting tired here, so there you go. So I'm sure you're all probably familiar with DocuSign. Do you all know that Zoom has a feature, if you're using Zoom, where you can pass the screen, or many other services as well? So what I typically do is I'll pass the screen to the agent or the client, and this is where they DocuSign the application. Has anyone left from their seat from wherever they are? So that's the exciting part about this. It's really exciting to be able to do this on the spot here. So I'm sure you all know how this works. I just adopt my signature, and we're off to the races. We all know DocuSign is pretty much dummy proof. I go to the top. Welcome to the future where life insurance is heading. So that's really how simple it was. Reach out to your marketing manager, because we have some great videos, short videos that just summed up the bucket sheet, that sums up in 51 seconds. So we have those videos that you are able to send to your clients. You can attach your quote and apply link, and they can start shopping and having fun themselves here. So I like to keep these to about 30 minutes, a little bit over, but again, hopefully this has been really simple for everyone. Again, if you haven't signed up for this, there is a place in the chat box to sign up for your own personal account. Reach out to your marketing manager today and go ahead and start asking some questions and see if they can help you with this. It's really simple. If you do have questions, please go ahead and put them in the chat box now. Again, I want to say thank you to everyone for being on the call. Hopefully this has been helpful. Let's see a jump in our IUL sales. This is needed, but you just have to be comfortable having the conversation. So again, thank you so much, everybody. Put in your questions and I'll answer those shortly. And everyone have a blessed day, okay? Wow, look at these questions. My goodness. Keep putting them in there. I love it. Okay, so here's a question that always comes up at every single time. If you have a current relationship, that's fine. We offer something called dual contracting. I'd say 50% of the agents we work with already have relationships. So we could basically, you can use the software right away. You can set yourself up. And if a case comes in, all we do is set you up with a completely separate code, no harm, no foul. It's just business as usual. The second thing is that we also offer just-in-time contracting. So we have a one-time packet you fill out, gives you access to all 60, 70 companies we offer. And once you fill out that packet, you're good to go. You can use our software, and it's 100% complimentary as well. I hate the word free. There's no value in free. We don't charge you for the software. So let's answer a few more questions here. So someone said, do they have to have the application owned on their side? So they're going through the application with you at the same time, right? And they're seeing your screen and you're answering the questions with them / for them. All you do at the end is there's a feature where you can pass the screen via Zoom. If you don't know about that, I would highly recommend looking it up and figuring out how to do it. It just shows a remote control on the bottom with a green screen there. You click on it, you click on the person's name, they have access to your screen. It's extremely, extremely easy to do that. Just a heads up, okay? That's something that really is important there. Let's see here. Someone asked about commissions. I love it. All the commissions are in your BOSS system. So you can log into BOSS and you go to products and you'll be able to see all the commissions for all the products for all the carriers right here on the spot. So we put that at a tremendous amount of work went in to be able to, for you to have access to that. So hopefully you can take a look at that. So someone said, what does Back9 send to the agent for signatures? So great question. Once the client DocuSigns the application, their client's done. They don't have to do anything else. Then what's going to happen is that you're going to get an email from, the agent's going to get an email from DocuSign asking them to sign their part. There is an access code. It's the last four of their social. They sign. They do their agent report, and then they're done. So that's how it works for you to DocuSign your part. Hopefully that helped. So another question, if you said yes to the existing policy or replacement, does the policy automatically get canceled? That's definitely not, no. You have to get this approval first. You have to go through the underwriting. Once the policy gets issued in place, then it's a manual process of the client having to reach out to the other company to cancel that policy. You would never want them to cancel that automatically, because what if you don't get coverage and you're not here anymore? That could be a real problem. Good question there, Don. So typically what we see here with IUL is that this is going to be money that's been, usually it's, again, you want to use money that's been taxed already, because it defeats the whole purpose if the money hasn't been taxed yet. So why are we doing that? Because we can pull the money out tax-free, right? That's why we're using after-tax dollars. That's really important, because as per the bucket sheet I showed to you, there's other vehicles where you can defer and not pay taxes, defer. You have other vehicles for that. So what we're trying to do is help you with a fourth bucket where you can pull this money. This is the first bucket you're going to want to pull from, right? Just a few more here, and I'll let everyone go. So someone said, can you explain more about why the IUL is good for a newborn baby? So it's a great vehicle for college funding. You may or may not heard of a 529 plan, right? Those are great vehicles. They're very similar to this, but the biggest difference is that that money has to be used for health or education. Well, what if little Jimmy doesn't act right? And well, here with this policy, it's typically going to be owned by the parent or owned in a trust. And if little Jimmy doesn't do what he's supposed to be doing, then guess what? The parent has access to that money to do whatever they want. They can go to Vegas, they can do whatever they want. So that's the biggest difference between the IUL and the 529 plan. And that's why I really like these. And again, I see someone said they don't have an account, so go ahead and click in the chat box. If not, you can always put your NPN number in if you don't have an account, and I will go ahead and get you set up there. But most people should have an account on this webinar. All right, well, I have a 11 o'clock webinar here, so I have just a few minutes to get my breath right. So I really appreciate all of you. Hopefully we can start seeing some more IUL sales, at least start talking to your marketing manager about how to do these. If you work with me personally, I'm your marketing manager. Again, I'm happy to get on the call with you and the client and help you out there as well. So thank you so much for everyone. You guys have a blessed day, okay?